let's talk to Dumebi Oluwole now, the manager of financial derivatives company. Hello, Dumebi. Good morning. Great to have you.
Good morning, Labi. Great to be here.
Yeah, and fun fact, Dumebi is not in the studio right now. She's over there, too. But that's fine. So, Dumebi, this is a big story now. What impact could Dangote's decision to sell up to 10% of the refinery, what could that have on, investor confidence, and the broader capital market here in Nigeria?
So we start off by the decision in itself, right, to even want to sell. And what that tells the broader investment market is that it's a very mature business, open for additional capital, and there are huge prospects for expansion, right? So Dangote wanting to do this, which is very much aligning with the model he has done with other companies within the Dangote group, like Dangote Sugar, Dangote Cement. What this just tells the investment climate or investor climate is that, number one, the business is now mature for further capital injection. Number two, there are huge prospects for expansion, and Dangote, of course, doesn't want to do this alone. Primarily, when businesses of this nature and size decide to actually, open up their business for additional capital, what this means is that in the coming years, there is huge potential for additional yield, additional revenue, and additional, I would say, profit, right, to come in, and investors will generally be happy. In terms of the capital market, what this just does is, number one, it gives huge prospects for the Nigerian Stock Exchange, meaning that there will be, possible increase in the market capitalization, additional institutional and retail investor appetite, towards the market. And within even the foreign investor climate, of course, emerging investors, would definitely be interested in putting more funds into the Nigerian Stock Exchange. So it definitely increases the appeal of the NGX, and we would likely see, institutional investors, retail investors increase their appetite towards the NGX, and especially for this particular stock. And a very good point was when Geregu was coming up on, the stock exchange. We saw a very huge, appetite. The stock market was, rebounding very quickly, and this would likely be a very good case with the Dangote Refinery as well.
Right, I can just imagine, what happens to the NGX market cap, once this happens. I guess it's on the road to 100 trillion right now, but we'll keep watching though. But how realistic is the target to double refining capacity from 650,000 barrels per day to 1.4 million barrels per day, within this proposed, time frame, giving existing infrastructure, feedstock availability, and global demand conditions?
I mean, it is very ambitious, but then again, when you consider the fact that the move to actually do this is based off of huge capital injections, the prospect for it happening is very positive. And remember that this is not the case of a state-owned refinery, right? So a lot of the skepticism around expansion plans when it comes to the downstream petroleum sector, it's very easy to find all of that skepticism feeding into the Dangote Refinery. And that's because all of the conversations we've had around this before has been primarily centered around, state-owned refineries and their capacity or ability to even expand their operations. So we see a lot of ambitious targets that are hardly ever met. So with Dangote right now, we've seen the Dangote Refinery meet its refinery capacity. They're on their way to about 700,000 barrels per day, at least by the end of the year, going into the first half of 2026. So increasing the capacity to 1.4 million barrels per day, we do think that it's very achievable. Of course, it does mean that there has to be a lot more transparency around infrastructure, around access to crude oil. And I think that's where conversations around where the NNPC comes in. Are they going to be providing Dangote Refinery the crude oil that they need in ample supply, or is supply going to, generally be net imported? And if that is the case, what does that now end up meaning for the domestic commodities market, like for petrol, for diesel, and even for kerosene? I think that's where a lot more of the conversations will be in the coming months, especially if they have to import to increase their capacity.
And what role might, Middle Eastern investors and the NNPCL's potential increased stake, play in shaping, Nigeria's ambition to become a regional, refining hub?
I think I would say it's a strategic move in that the partners are people that have huge experience, as a matter of fact, successful experiences with running oil and gas, transforming it, and the entire downstream petroleum sector value chain, right? So with Saudi Arabia, we've seen huge success stories with Saudi Aramco. In China, we're seeing huge success stories as well with their refining capacity. So partnering with such investors, I definitely think is a very good step in the right direction. It also definitely means that there is some level of expertise and technical expertise coming on board to ensure that the expansion plans for the refinery are hugely met or are largely met. And I think it also increases the appeal of the refinery to the broader, global investment climate, right? And I think that this is one of those things where we obviously would watch to see how it eventually plays out. But right now, in terms of signaling, investor confidence is definitely looking up. And this obviously coinciding with conversations around NNPCL's privatization as well is definitely worth, increasing the investor confidence. And I do think that market confidence regarding this conversation would be relatively bullish, except there are, huge shocks to how well these plans will be implemented.
Right, I guess all eyes on the U.S. Fed. Now let's pivot to monetary policy. Next week, supposed to get another decision. We got the first cut, and it wasn't really the deepest cut, from just 25 basis points. What are you expecting for this next meeting?
I mean, I still definitely expect the rate cut to be very cautious. We have seen inflation, at least the headline inflation rate, significantly decline, 18.02%, I think, as of September. But the truth is, we do think that commodity price pressures are still very much potent. People are still kind of reeling from that, and there are still shocks to petrol prices that the federal government or even the CBN would definitely want to consider, right? So I think that the Monetary Policy Committee will be rather cautious. Rate cuts will still largely be around 25 to 75 basis points. Anything over that definitely would signal positive, it will be a positive signal to the market, especially because of what it means for access to capital and access to credit for small scale enterprises that have definitely been crowded out from accessing credit from commercial banks. So I do think that it is definitely going to be a cautious move. I think that the Central Bank or the MPC is going to cut rates again because of the steady decline in inflation and prospects for that heading into the end of the year. But I also think it's going to be cautious.
All right, thank you so much. Dumevi Oluwole is the manager at Financial Derivatives Company. All eyes on the U.S. Fed next week. Thank you so much.
Thank you for having me.